What's going on, beautiful people? It's Joe, the Nomad Investor, where dividends, freedom, anywhere is the goal. And today we are back with another portfolio update, but I've got some news. High yield income ETFs are over. They're all going to zero. Bitcoin's going to zero. The world's economy is going to crash. It's over. I'm just kidding, guys. I have all my bags. I'm still invested in everything. I have not exited any positions yet, but I will kind of cover what my current portfolio looks like. But for those of you who are new here, before we get into things, this is my YouTube channel currently. We are at 246 subscribers as of the filming of this video. 12 videos released on the channel, and I'm currently filming the 13th. And most importantly, if you are new here, make sure to hit that subscribe button. It goes a long way and it helps keep me motivated to keep making these videos, and you guys can join me in the journey. So with that being said, let's get into things. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I'm not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. With that being said, let's scroll down for those of you who are new and share the game plan and goal for growing this small portfolio from $0 to $1,000 per month in dividend income. So first things first, I have two sources of income. I have remote work income and I have business income. And basically I do anywhere from $300 to $1,000 per month in contributions. Now my remote work income is consistent, but my business income, it really does fluctuate depending on the busyness of the season, etc. But I'm gonna deposit that amount that I mentioned into my Robinhood taxable brokerage, treating this brokerage like a business and aiming for 30% plus high yield. And I'm doing this by investing into high yield income ETFs such as WPay, HOW, QDTE, XCTE, XPAY, BTCI, and etc. Not limited to those, but those are just some suggestions. But examples. And I'm investing into a max of 3 positions. Now, I'm planning on possibly changing this, and I always bring this up in the videos because I don't want to be married to this idea, but that was my original goal and plan because it's a small portfolio. And basically, I'm alternating between anchors and satellite ETFs. That's part of the core satellite investing methodology, strategy, and approach when it comes to the investment community. I learned from a guy on YouTube named Eugene Vasquez, but apparently this has been around for a long time, so it's nothing new under the sun. And I'm taking the dividends that get paid out, whether it's weekly or monthly dividends, and I'm reinvesting them by activating DRIP back into the positions that I'm in, or I will stack the dividends to purchase when the market is down like now. Now, recently I have changed my methodology. I'm not going to be doing DRIP or automatic DRIP. Instead, I'm going to be stacking it up, all my dividends, and I'm going to be reinvesting them as I choose into the positions that I choose in the allocations that I choose. And basically, DRIP plus always compounding, that's pretty much the portfolio growth strategy. So even though I'm not going to have automatic DRIP, I am still going to be reinvesting. So that's going to cause the portfolio to grow. And basically, by doing all this, I'm going to keep rinsing and repeating this until my account hits $1,000 a month in dividend income. And a quick disclaimer again, none of this is financial advice. This is for entertainment purposes only. All right, now again, because we have some new people, I'm sure, viewing this video, I'm going to quickly cover this, but these are my dividend income milestones while growing my small portfolio. This is basically just so I can celebrate the small wins leading up to the bigger goal along the way, which is the $1,000 a month. But we've already smashed the $100 a month goal. We are on track, well over on track to smash this $200 a month goal. And yeah, these are the rest of the goals. If you're new here, you can pause this and take a look. But with that being said, let's hop into the portfolio. So we are doing terrible right now, guys. I am down $112 in this portfolio today. That's 2.89%. And yeah, it's not looking pretty. But if we take a look here, you can see my buying power decrease, and there's a reason for that. So I ended up using some margin on a few of my positions, which I'll cover shortly. But basically, I've got $0 in cash as of right now. My margin total is still $4,215.30, and I've used $1,357 in margin so far, and that could change. I'm currently at a margin buffer of 46.92%. This was 48% or 49% when I first got in, but as you can see with my account taking quite a dip right now, it makes sense that it's this. But this is still a healthy range for me personally. Now, with that being said, let's get into the positions. Real quick, I'm just going to show you guys, this is how much I'm down. So WPay is where I'm down the most. HOW is second, and then NVDW, I'm actually doing okay, and I'm only down Okay, so let's hop into this. So the biggest change that I have here is I now have 56 shares in WPay. Again, I'm down $110, which is 3.74%. And my average cost has gotten down to $53.60. I haven't purchased anything yet, but actually, this is a great price to purchase right now, to be honest. So I'm just going to kind of let the market kind of do its thing for today and see kind of where it is towards almost the after hours time. And that's kind of probably when I'll maybe be buying some more of this to get to the 60 shares a mark area. But we're currently at a 56.47% portfolio diversity. Now moving on to HOW, we are currently at 20 shares. So I did increase because it did drop below my average cost. And I'm probably going to increase this position a little bit more as well, just because it is, going lower. But again, I'm going to also do the same methodology. I'm going to be waiting a bit, but we are down $97.54, which is $94.36, which is 6.68%. And we are at a 25.72% portfolio diversity. And then last but definitely not least, this is my newest position. I'm very happy to be investing into this position, even if my average cost is a little bit high, or not a little bit high, but just a little bit above where the market currently is. But we have 20 shares of this, and I have a total return of negative $4.60, and I'm down 0.5%. And the portfolio diversity for this is 17.81. So I'd probably like to increase this position a little bit till we get to around the 20% mark. Okay. And one thing that you'll notice is that I have 20 shares flat. There is no fractional shares. And the reason why is because I kind of come to this conclusion that as long as I have quite a bit of cash to deploy in some of these positions and I can afford whole shares, what I'm going to do is I'm going to start doing limit orders. That way I can maximize the best average cost possible. The cool part is, for instance, if I did $45.73 and I just was buying one share, for instance, the cool part is it actually will not just so much fulfill at just that price, but it could be even lower when you're doing the buy. And then if you're selling, if you put that price for selling, it could be even higher. That's kind of what I've learned so far from experimenting with this when I have sold positions. Okay. Now moving into this is where the account was this morning, pre-market. Now, I mean, it's still morning, but this is the current state of things. So we are hurting. But anyways, this is what I had marked before, as I already shared. And then again, nothing has changed on the dividends being paid outside. So this is just my investing journal for those who are new. I've been tracking this all the way back since I started this account with only $678.67 back in mid to late August. Okay, that's it for that. And then let's hop into the portfolio sheet. So these are the current positions. And as I like to always do, I like to look at my total return and market return. As you can see, I'm all in the negative. And to be honest, it's to be expected. We're currently really hurting from this tariff being extended news and so much more, such as crypto or Bitcoin moving in the down direction. So it's not very positive. And again, just sharing this for you guys' sake, especially for new ones. I've generated just this month alone in October $106.73. In total, that's $140.90 for this year. Now, last, as I showed you guys before, I do have $1,357 in margin that I'm using. And in my margin video, how to use margin on Robinhood, I did create this little calculator. And right here, I entered in my margin balance just so I can know how much I'm going to be charged in daily interest and monthly interest and annual interest. And I'm not sure if the $1,000 that I use is going to end up being interest free or not. So we shall see if this is actually pretty accurate or not. Okay, so there's that. And then with that being said, I did get a lot of comments on some of my other videos and people kept talking about positions that I should look into. So I decided to take a look at them real quick with you guys. This is strictly looking at the stock price. Now, it is something to keep note that maybe I should take a look at the distributions and maybe we'll do that afterwards. But pretty much this is the current state of this one. This is CRCO. One of the subscribers, one of the viewers commented this down below. And so as you can see, it's been taking quite a beating. And unfortunately, this is not really the best thing to look at because unfortunately, it hasn't been out that long. And we know ever since October 10th, when freaking Trump released his news, this is what freaking happened. All right. This is interesting. I'm not sure about the payout. So let's take a look at that real quick. So we have Yield Max. This is a Yield Max fund. I'm sure these Yield Max maxis, if you know what I'm saying. Love this. So it's currently an 85.45% distribution rate. That's not too bad. And then the ROC, the return of capital, is 98.14% as of October 15, 2025. Let's take a look. I want to see Oh, this is on the note: 1.13 million in net assets. And then, okay, this is interesting. So it's not doing many contracts because this looks like a covered call. Probably, let me see. Yeah, it's an option income strategy. So probably doing some covered calls from the looks of things. But yeah, they have some contracts here. The biggest weighting they have is this United States Treasury bill. I don't know what reason that would be for. Maybe someone could comment down below if they know. Oh, okay, so this is really new distribution. So they just recently paid on today, $2.48 per share. So that's pretty good, but we'll see. But that's CRCO. And then there's GIAX. Now I haven't looked into this one. This is interesting. It's from Nicholas Global Equity and Income ETF. Now there's actually another position from Nicholas, and I don't know if these are actually the same or not yet, but I know BLOX, which we'll kind of go over to later, is from Nicholas. So let's take a look. I mean, it looks like it's been out for a while. Oh yeah, it has. Okay, cool. This is actually not a bad chart. So like, again, Liberation Day, this is pretty standard. Even the S&P kind of followed this action. But this is kind of what I'm looking at here. So this is interesting. But if you go to 3 months, we've been down and to the right. That's not good, guys. Yeah. Okay, yeah, so that's Nicholas, and that's GIAX. So let's take a look at the distributions for this actively managed exchange traded fund that seeks to generate income and also capital appreciation. They're holding shares of unaffiliated, passively managed ETFs. So this is a passively managed. Okay, interesting. That seek to provide exposure of a range of global equity securities and selling daily index credit call spreads. Okay, so doing call spreads, got it. Or selling call spreads. Net assets, 72.47 million. Okay. But distributions have been 35 cents a share. Okay, so it's a 24% distribution rate. So, and is this weekly or monthly? Okay, so this is a monthly. Okay, got it. And then again, return of capital. So tax deferred ETF. So that's interesting. Now, moving on to XPAY. This is probably one that I like the most, to be honest, out of the other two options. I'm not opposed to GIAX, and I'm not opposed to the other one, but I don't know. This is what I meant when I said this is similar to flex call options for the other fund. But yeah, I mean, this one is just basically following the S&P 500 for the most part. For the last 3 months, look up and to the right, unlike one of the last stocks that we were looking at, last ETFs. And again, this is the same kind of performance that we've been seeing in the S&P 500. So this 21% distribution rate. This one is paid monthly, as it says right here. And then if we go to, so yeah, look, it's paying like 95 cents a month. So if we pull up the calculator, that would be, I think, 23 cents. Yeah, 23 cents per week if that's how you wanted to do it. But yeah, I mean, that's not bad. That seems like a pretty like safe-ish position to get into. And then let's hop into BLOX. Now, this one's super interesting. I actually was watching Pay Me in Dividends video on this. Now, very interesting. I've been talking about this in a Discord community that I'm a part of. And yeah, it's something that I'm really considering actually adding to my portfolio. It would be a very different play. And obviously, it would be with a complete different hedge fund than my other positions that I have, which is currently in Roundhill. Obviously, right now with the state of crypto, because this is a crypto income ETF, things are in the down. But in 1 month, we've been, relatively up. 3 months, this chart looks great. Year to date, this chart looks very bullish. I like this a lot. And then if we take a look at this, all right. So it's primarily focusing on Bitcoin and Ether holdings, and as well as other crypto industry companies and weekly income. 18 cents per share is what it's looking like. So we got 18 cents per share. And this is paid weekly, by the way, guys. So we got about 72 cents per share every single month. So, that's not too bad. It's nothing crazy or life-changing, but hey, something's better than nothing, right? This is really cool because, yeah, they've got some good holdings here. And I like that it's not just all bullish into Bitcoin and Ethereum ETFs only. So that's something to note. But yeah, this one looks really good. And last but not least, I wanted to hop into this one. A subscriber who commented on one of my videos put me onto this. So Roundhill's coming out with a gold miners weekly pay ETF. I'm really looking forward to this now. This is probably going to be another swap ETF, considering that's part of their weekly pay ETF stack or weekly ETF funds. So it's going to be that 1.2 times leverage exposure to the underlying asset, I believe. So the underlying stock. So let's see. It says here seeks to achieve its investment objectives by paying weekly distributions and providing calendar week returns before fees and expenses. That corresponds to 1.2 times the calendar week total return of equity securities of global gold mining companies. Under normal circumstances, the fund invests at least 80% of its net assets plus borrowings for investment purposes in total to return swap agreements and common stocks that together provide approximately 1.2x exposure to the performance of gold miners. So that's something interesting. And, obviously this is going to do a ROC or return of capital strategy as well. So this will be tax deferred. But this is going to be an interesting position. I'll probably add it to the portfolio, to be honest, because I need something that's very different. And obviously gold and gold miners have done very well this year, considering everything. That's super interesting to see. And I did say I was going to show you guys something else, but I can't remember. But yeah, this is the state of the account, guys. We are not looking good. Like I said, down $102 right now. So yeah, that's the current state of the account, guys. If you want to see me review any other positions, let me know. Thank you guys so much for watching. If you really enjoyed it, please smash that like button. It goes a long way and helps with the algorithm and everything on YouTube. Most importantly, if you are new here and you watch this video to the end, make sure to please subscribe. It really does help me stay motivated to keep creating more content. And last but definitely not least, if you have anything you want to comment about, feedback, suggestions, comments, doesn't really matter to me. Comment them down below. And without further ado, until next time, guys, peace.